Good morning, all. Camelback Trading 2724 coming to you this Thursday morning, April 30th, last day of the trading month. We're about 2 minutes before the unemployment number, jobless claims come out. We're looking at the market profile of the SPY ETF here on Window Trader. Let's go over a couple things before we get to today's action. Let's go back a couple of days where on April 24th, SPY ES had an inside day. SPY did not, but just barely, so you could have treated it as one. Did not like the price action, right? The end of that Friday, the way it just grinded up. Didn't like it. But doesn't matter what I like. What happened the next day? If you want to call this an inside day, we gapped out of it to the upside. You go with it and monitor it for continuation or lack of. Well, there was continuation. Next day, we gapped higher again. Yes, the gap filled, but we're still one time framing up. What happened yesterday? Gapped higher again, filled right away, but again, we're still one time framing up. Now, this day, yesterday, on the 28th, even though they pushed down and had a trend day, turned into a B-shaped long liquidation. Even though we gapped higher, had a chance for 6 set of single prints, ended as a P-shape for short covering. So there's uncertainty in this market. There is just short-term traders in this market. After the close last night, we traded as high as 296 and change when Microsoft, Tesla, and whatever else earnings came out. Look where we are now this morning. Before the unemployment claims, we're now trading basically unchanged or 70 cents lower at a very, very prominent area, the afternoon pullback low. Mechanical? Absolutely. Short-term traders? Absolutely. So let's go over the destinations and then come up with a game plan once this number comes out. So for the upside, our first destination will be yesterday's high of 294.88, which was also a poor high. Then above that, we have that 295.07 9 wide for March 6th, and that was basically what the algos seemed to have been shooting for yesterday. Never got it. And then above that, we have 298.78 daily high, and then filling a gap at 300.01, a 123-point gap for March 6th, which also is right around the 200-day moving average. For the downside, our first destination right now is that afternoon pullback low of 292.51, then 290.41, which was yesterday's low, then 287.46, which was 10 wide from the 28th, 285.40 daily low, and then 284.62 daily low and filling the gap at 283.70, 92-point gap from the 27th. So right now it's 8:31. I'm assuming the jobless claims came out. I have not seen anything, and we have not had much movement in the market. Right now, our pre-market low is 292.20, and our pre-market high is 295.42. So game plan right now for this morning. Well, we're opening in balance, in value at the moment, right? We're hanging around this afternoon pullback low. If we are to open around this level, pull back to J's low, you can take a call play. If we hold J's low, there's really not much up above us. If you get into M period, a lot of times, once M period, if you get into it, you'll basically trade it a good part of the range. So if you get accepted back into M period, well, there's a possibility of going at least to the POC. Now, the POC was only 7 wide, but it's still a destination. So if you're to hold J's low and go long and get into M's range, I would expect that kind of trade. If you go long and J's low does not hold, well, there really is not much, right? Now we're talking, it's a new day. Yesterday I said there were things to lean on if I bought here in J's low or lower because the indices were higher, value was higher. Well, that all changes, right? If you take out J's low, well, right now the indices, if anything, would be unchanged or down a little. That's number one. And number two, value would be at least overlapping to lower. So those are two huge changes as opposed to why I would have bought it yesterday. So if you take out J's low, you have to decide where you want out. Is it right away, or is it at least maybe at yesterday's opening? Short play right now, don't really have one. One you could possibly consider is if we don't get into M's range, it keeps failing to get into it. I'd rather see the afternoon pullback low taken out first, come back up, fail at M and come back below it. Then you could take one because, like I said, there's not much below until the day's low. Again, those are two early trades. You're going to be in balance, in value. It's the worst of the risk reward. Obviously, by 9:15, 9:20, I'm telling my trading room exactly what I want to do prior to the opening. Let's go to the charts. Okay, monthly, last day of the trading month. One time framing down. We are going to have an inside month. Right now, the bulls are above that 278 trend line by a good amount, so that's one good positive for them. The second positive for them is if they're to close closer to the top of this month's range, I would think the odds of coming out of it to the upside obviously are better than the downside. It certainly doesn't guarantee it, but you'd have a better chance. This month's high is 296.80. If we close at 293, you have a better chance of taking out the upside by $3 than the downside, which is 243.90. Doesn't mean it has to happen, but the odds would be better. So the bulls trying to finish the month on a very strong note. Weekly, 2 days to go in the week. We're one time framing up 5 weeks. Inside week up is holding very nicely. Above 287 is holding very nicely. So right now the bulls are firmly in control. The one thing you would like to see is better volume, though, on this move up. Same on the daily. One time framing up for 3 days right now. The bear's goal is to take out yesterday's low to stop that and at least come into a new 4-day balance if they're to do that. That's the bear's goal. Bull's goal, obviously, is to continue this one-time framing up and at least attempt the 200-day moving average. Have a great day trading. Good luck. Check us out at camelbacktrading.org, and we'll recap at 4 p.m.